Welcome to the third video of this Markets 0 to End series. Today I'm going to be talking about market manipulation, and I include this in the prelude because this is not a fair game, and I'm not here to whine or complain. In fact, it's the opposite. I'm here to talk about it in a way that you can understand this, understand the game before you get involved, and hopefully actually profit off of this ugly manipulation. Now, in theory, market manipulation is illegal. But the fact of the matter is who controls the laws are the big guys, the wealthy guys, and they control this game. So yes, is market manipulation illegal in theory? Absolutely. But does it happen every single day? Absolutely, once again. So I'm going to go over the main ways the market's manipulated. Number one, short reports. These guys, whether it's Hindenburg Research, Citron, a bunch of these companies like to make a nice short report. And you know what? I would consider it fair game. But look at this report. December 18, a short report on Sezzle. Looking to December, we see a whopping 23% drop in one day, purely because they're short report. How is that not manipulation? These guys can take a short position, whether it's puts, whether it's just short selling, they can short sell in huge position, and then instantly release the report and boom, they're up 20% in a single day, which is equivalent to 2-ish years of the average market's annual return in a single day, and then they can just cover. And if you look, were they right? Not really. If you bought the day after their short report hit, you'd have made a ton of money and you'd have killed the market. So one, is it fair that they can just instantly make this kind of wealth? No, because we can't do that. But guys, they can use this to cover their short. They can use this to get people to panic sell and add to their long. All you gotta do is understand what they're doing, and the next time you see a short report, don't instantly panic sell. Think about it. Think, are these guys really exposing something that's true? Are these guys just bringing up some very weird or interesting cherry-picking kind of facts to make you sell, to hit stop losses? Are they trying to cover their short? Are they trying to build their long position? The next time you see a short report, you guys need to look at it in a little bit more light. The next thing I want to talk about is, once again, a short report on app. This is Muddy Waters, a very, very prominent research firm. On March 27th, they had a short report on AppLovin. Now, this was a weak market, but as you can see, boom, a company worth over $100 billion dropped 20% off this report. How much money do you think these guys made with their puts or short position? And you know what? Is this huge company a fraud? Probably not. And if you happen to buy after a report, you would have beat the market in the same time frame and you would have been laughing up 50%. Once again, don't listen to these guys. Think about it. Sometimes they're going to be right, but for the most part, they're either trying to cover their position, create a huge profit and liquidity, or they're trying to start a long position. Another example, which is different, downgrades. These are analyst downgrades. How funny is it that a company like Bank of America or any other major bank can start a position, instantly upgrade it, and instantly be up? Or they can short a stock, downgrade it, and they'll instantly be profitable on their short. We can't do that, but they can, and that sucks. I'm not going to lie, that sucks. But we can try to understand what they're doing. In this case, on November 14th, they downgraded HIMS. If we look at this chart, they sent the stock crashing a whopping 25% in a single day. Excellent profit for their puts or short. Perhaps they weren't even in and they wanted to build their long and they just wanted a cheaper price. Look at that. If you bought right after the short, you would have been laughing and you'd have made a huge amount of money. When these guys make up all these smart sounding, brilliant reasons on why they're downgrading, you can simply inverse them, I feel like, more than half the time, because this is just pure manipulation. Another thing about analysts, this is Snapchat stock, dating back to late 2021. At that time, Snapchat was trading over $50 a share. We had price targets of 95, on the low end over 50. Average price target a whopping 77. And then as the price drops in 2023, what do you see? You see these price targets dwindling. Why is it that at the highs, they're screaming for you to buy and giving at these outrageous, meaningless, senseless price targets? And at the lows, they disappear and tell you to sell. And when you search up a stock, a lot of things you'll see are about these analyst ratings. Every day on the news, you're seeing these analyst ratings. These are influencing the prices. And it's crazy because these analysts know nothing, or perhaps I shouldn't say they know nothing. What they know is just how to manipulate retail. That's what they know. This is disgusting to say the least. But the next time you see a huge upgrade, you should ask yourself, are they dumping their shares onto my hands? United Health under criminal investigation for possible fraud. The Wall Street Journal. It's crazy. It's insane that these so-called credible sources, whether it's Wall Street Journal or Bloomberg, can often post these outrageous, baseless rumors. As you can see, May 15th, they're posting this insane rumor, and all they have as their source is people familiar with the matter. I can pull people familiar with the matter out of my ass and make an article like this, but somehow this is on a credible news site, so-called credible, and it massively affects the stock's price. Let's look at how the stock reacted. Boom. A company over $250 million worth drops over 10% in a single session. Intraday, this is significantly more. That's insane. Some baseless rumor they spread. And you know what's interesting? If you happen to buy right after that, that would have been the bottom. Within a few days, you would have been up like 17%. And right now, you'd have been up over 10%, which is not bad considering the pace of this. What I want to mention is these guys, why did they post that short report? Not a short report. Why did they post that fake fraud news? Either they had a massive short position and they had put something like that and they're ready to cover, or they're simply getting long at a better price and shaking out a bunch of retailers. I can tell you, I read some comments on Twitter on this day. I scoured the news looking at some Reddit as well. And people were saying outrageous stuff on this day. Oh, this company's a fraud. It's going to go to zero. That's funny. A Dow component over $250 billion company, a blue chip that's been around for over 40 years, with the 9th most people employed, is going to go disappear overnight. They drive this sentiment by publishing outrageous news, outrageous articles. Why? So you can sell to them. So you can make the exact wrong choice and lose your hard-earned money, and they can get richer. Think about that. These guys, if there was truly fraud, do you think they would so generously tell you, oh, there's fraud, you should sell? No, they'd be telling you to buy so they could dump their shares on your heads. Anyway, this wraps this episode up. If you guys haven't invested at all, this is a really good video to shed some light on the bad practices that happen. And you may not understand everything now, but you will sooner or later. And I hope my future videos can help with that. But for the people who have been here for a decent amount of time, they've seen these news articles, they've seen these analyst upgrades, these short reports. I'm not sure how you've performed, but I believe that we've all been tricked once or twice. And I believe that once you've seen these examples, you've actually back tested and looked at what's happened, you won't make the same mistake again. So I hope to see you guys in the next video in this series.